Perfect. Live chat. Chat is live. Discord link. Probably going to be doing a lot of other tickers today. There's so many things to go through. I want to kind of do Fang too, but I didn't put that on the list. Hey, Fang's in a good position right now. PHH. Let me check that out real quick as people are coming in. I'm going to go through quite a bit, I think, today. I wanted to run through some that I think might be good for different reasons. Wow. Well, it's not oversold on the weekly. That's the first thing I see. There's still way more downward pressure here than upward pressure. What a drop. Way oversold on the daily. Looks like $6 was a support at one point. And it looks like this might be like maybe like 450. But that's a massive drop. Yeah, there's a diminishing volume here, which is kind of strange. So there's always like let's just put it this way. So like there's only two possibilities here, right? Usually. So one is that you're kind of entering into what I usually call like the final LSPY, which is typically like a little tiny cat ear, but on the chart, sometimes it looks more like a just really flat, kind of boring area, which is kind of what this looks like. We see this all the time. This isn't particularly unusual. It's almost always like built into these drops. You get these little ledges before you drop further, but that's just the nature of like, hey, you're hitting a support, then you're back testing it with a hook as supply, and then it dumps. But what's noteworthy about them is if it does something like that, like this, for example, there's some important measurements that can be gleaned from it. So like, for example, back here, this was already in a downward move, but there's a lot of similarities in these kinds of drops, and it's not just AMC. And one of the things I always look at is that reaction move and how it's very typically like almost equal to the drop, which is a big deal. And then what that symbolizes to me is that like this is the primary sell down. I'm using this as an example, but like this is the primary sell down, and then you're basically just getting like a flag, right? But essentially like the rest of the move is more controlled in order to kind of generate like a 50-50. So what's pretty unique about this is that when it works, and I mean I feel like it works quite a bit. There's different situations. This gives you a pretty decent estimate of where that bottom might be and where the next top might be. Again, I'm not 1,000% sure if it's just because you're setting up like a liquid middle here, and then you're kind of using the whatever supply or demand, if it's up or down. But it seems to be the case fairly regularly. And the hardest part about it is just identifying the reaction move. So like this one has the same principle here. So if you look at where that goes and then you take it backwards to where that middle is, you can see that chops like right along where that middle is going to be established. And then look at where it came back to. It's like that drop-in area. So like this applies in more than one stock, it's not the only place it would apply. I don't think that's always the case, that it's going to have that kind of massive reaction, because it depends on what's going on with the ticker, for sure. It also can be really tricky because sometimes you think that the ledge is really, really high, and it's probably not. Like in this case, my guess is that off the bat is like this is going to be irrelevant up here at 4 to 6. This seems like the liquidity that was dropped. This looks like the ledge to me right here. There's like a singular bounce right there. It's right at $3. So if it's going to go back up and it has like a continuation on the drop, this is just an estimation, okay? It certainly could just bounce here. That's not impossible. You know, in order to do that, you have to start making higher highs, but it didn't do that here. This looks like a pretty classic support, drop down resistance. So unless it jumps back above $1 here, 110, I'm thinking not a good position to be in. And even that doesn't really bode super well all the time, because sometimes you can just have like an upthrust and then drop back down. So it's complicated. So you're looking for a higher low here, but ultimately I would suggest that this is probably the best way to do the measurement, that you might be in a range between like 60 cents and $1.70. So best case scenario is this goes ahead, if maybe it has like an upthrust, but it goes ahead and drops, goes down like here, and then reacts back up. And then ultimately your range is pre-established, you know, back to this area again. And this ends up being like a consolidation of sorts. So I'm not a big fan of this kind of a pattern right now, because I don't see this as a positive. Because like, again, the only other way to read this is that this was an auto reaction. This is where the big stopping point was. But then you'd have to say like the first thing that happened is that then it goes and makes a new low, which is a sign of weakness. So typically that's not a good sign. And that seems to support this idea that this could go right back down right here. And then same deal on the upside. So it's definitely generating, to me, what to me looks like a pretty succinct pattern. Yep. So the good news, if you want to say it, is that if it dropped down to like 70 cents, there's potential here, if that's kind of the bottom, that this is then going to whip back up around, looks like $1, about equal parts. Then again, there's no guarantees, so we'd have to kind of come back and look at it, I think, a later time. I'm not really sure right now. Like, this looks okay because it made a higher low and then it's trying to find support. But like I said, it would have to come back above here, find support, and here find support in order for me to be like, yeah, it looks healthy. So I don't, because even like one push up here is not enough. In my opinion, I think that's not going to sell it for me as a good play. It just doesn't look healthy right now. So well, if it goes to 60 cents, then yeah, it could go up to $1.70. I think that's the reactive move right here. But the implication is that this is now a liquid center. This is going to drop down and then try to bounce out. There's no guarantee it goes above the liquid center, but you certainly would have a good play from 67 up to about $1 at the least. I mean, the reaction should be about at least halfway. So that's a 60% move. If it goes all the way up, you're looking at, yeah, like 160. But it's a better play if it drops here. I'm drawing these comparisons because they're legitimate. Like when you have that big sell down, you've accumulated shorts. You can see right here what I'm talking about with like that high volume. And then there's this kind of a consistency there where there's this really high volume push, and there are reactions, but they don't create like a strong auto reaction. So you get this continuation of downside. It's the same thing that happened right here as well. You get the strong reaction and you get a hook, you know, and it doesn't always mean it's going to drop again, but it's just play by play. You kind of have to look at it and decide what you think is more likely. But a lot of times these are going to just like chop up. Like this was technically more upward than sideways here, but it's establishing again what would be defined later as like a midpoint for the next move. So it's really like you're going down a lot further, like 50% of the original drop, and then you're going to come above it. I think of it as like, again, like a channel. It's not that complex to me. Because in the end of the day, like what this probably creates most of the time is some kind of a channel bound move, you know, and it's just a equal part reaction on like a wave. So you got like wave up, wave down kind of thing like this. That's all. But for whatever reason, and that's why I'm saying I think that this is part of, maybe it's just the algorithmic nature of the market and just finding liquidity spots when there's a high liquidity zone, selling off from that. I think you could have a pretty easy to read move. That doesn't guarantee it's going to drop here, but it's similar in nature. So this could go all the way back up to $1 and then drop, you know, like that's what I'm saying. That's why I don't really like this as right now as much of a trade, because it's only like 10 cents away from an up thrust. Like a UT doesn't need to go much higher than what's already been hit here, which is $1.08. So if there's a desire to kind of get more sellers, they may take it back up to like $1.08 and then drop it back down. You'd have to see support here, and then it's okay. It might have a bigger reaction, but I feel like it's unlikely right now. I think this is more likely what's going on. That's really low volume. Looks like a flag. It's also widening, I think. So there's a widening spread right here. Yeah, so I'm not trying to overcomplicate this. I'm just saying like this is a fairly typical pattern that we see in the market. So once it drops, it would drop to this bottom here at 89 cents. Probably have like a weak reaction, much the same like an S-curve, and then have a really hard drop to try to meet that sign of weakness. So that's the more typical pattern here. For every one of these, or for every like 10 of these, you might find one time where it actually manages to build back out and have like a big hook or something, like a huge reaction up. I think this kind of stuff tends to be, again, fairly straightforward. And like there is a pattern right here that's good, which is the buy up pattern is pretty consistent. I can see that the directional input from that is pretty consistent, which is a good thing. But I don't think this is that kind of reaction where you would kind of take it for granted that it's just going to go straight up there. I think it would probably be a dip and then a pull back up, like a finisher. So that's my thought. Maybe something else happens here. It's a pharmaceutical. You never know. If it bottomed here, why can't we see it? I mean, you can see anything in the market. If there's an EMA retrace that seems viable to you, then that's what you should trade. I'm telling you, based on like the volume right there, there's like no volume on that bottom right now. It's dead. It looks like a flag. That volume on that push-up was super, super, super low. It looks like a chopping flag. And it's already beneath the support. So there's no confirmation there. I can't give you any confirmation that it's going to bounce. It just doesn't look like it's going to bounce. That doesn't mean it couldn't bounce. Everything in the market could have like a fake out. It's not a cop out to say that. It really isn't. But there's nothing else to do. Like, when we look at that, no, not in the case of a buy up. Not if you're going the other way. If we go up, let's say we're going up and it flags back down. If that volume is low and it's low sell-off volume, you're probably going to assume that this area right here is a bull flag and that it's going to have continuation back to the upside. So like low volume here in the backup, like in this range, once it hits the peak, low volume here would probably be a bull flag. The exact same thing is true the other way. If you're going down and then you get a really low volume bottom like that, it's probably going to be a bear flag. That's not really, that's such a standard concept that I don't really want to challenge that. There are times where it's not true, but every LSPY is a low volume flagging action. It does not, just like every LPS is like a low volume bullish action. There's a difference between that and volume spike that also has a volume spike the other way. That's like an auto reaction. So if you have a high volume drop, right, you have a high volume downside, and then there's a really high volume buy up here, I'm probably going to call that an auto reaction, not a flag. But I don't see any reason if it's already done that and then it slipped below and it's just chopping down here, really low volume. Is that seller exhaustion, or are buyers just not pushing it back up? Well, how do you know? Well, you don't really know, but if it already dropped below you can't know for sure, but if it's already dropped below the floor, there's not much you can say about that except just what you see. And what we saw was that was a really low volume push back up. It looks like more like a flag on a continuation. It's already beneath and it's already tested it and rejected it, made a higher low. That's why I was saying maybe it goes up again, but you can't know that that's not going to do like another UTAD or something until what? That's what I was saying, until it jumps over and finds support. So the argument that I'm making is not that it's necessarily going to go down. It has to go down, but it looks like it's bearish. It hasn't yet jumped over and made that support, so there's really no reason to take it for anything than what the chart tells you, which is it's more than likely going to continue down, like have continuation. Low volume on a push-up, again, it often depends on the pattern. If you've got a widening spread or a narrowing spread, that shows that there's narrowing spread really is more about weakness on the part of whichever direction you're going. And a widening spread is more about a challenge. A widening spread is more about a challenge from the opposing side gaining momentum. Well, like I said, I could give you an estimation for what I think about, here's what happens 1 out of every 100 times or something, but I just have to kind of go with what's more common. I can't predict unpredictable things, so. I wanted to kind of run through a few of these. I'll defer to some comments in a minute if you guys want to ask for some others, but I'm not talking much about AMC and GME today. I don't really see this as much of as a reason to kind of sit here and divulge again into all this stuff. I really see it as a reaction off of a reaction. This is kind of like an automatic reaction the other way in some ways. Yes, there's a drop in volume like we're talking about. So this could be a situation where you get continuation, and we've talked about the possibility this runs up again to maybe like 354 or something. There's not really a one-size-fits-all here. Certainly, like in the past, this has had multiple run-ups on these runs, so it's possible. I'm not really that interested in worrying about it right now. I think this is, unless it does something crazy in the next few days, yeah, no problem, man. I don't hope that didn't sound dismissive. I just wanted to kind of hit it and move on, which sounds dismissive, but that's not what I've meant by it. This isn't really that interesting to me unless we see some kind of a big break moment. So, yeah, all right. So let's talk about some of these other ones. So IONQ is a quantum computing stock, and I actually got in quite a while ago and made about 100% on the play, which is a great trade. Since then, it already had like a backup, and you can see that it backed up and it did hit the creek. So there's not much wrong with this play right now. It's back to approaching all-time highs. Its potential for an SOS is pretty great here. So an SOS with a backup So if this holds support, it's very likely that this is going to break out. Now, I can't, again, guarantee that, because with things like this, you could have another kind of a sideways action. We don't know what we don't know. But once this finds support over the top, and some of you are probably looking at that saying, well, isn't that like a cat ear? Again, if it were to be a cat ear, it would probably do something like this anyways and go sideways. It probably wouldn't just drop right now because there's a massive amount of volume involved. It seems unlikely it's just going to drop. But that being said, technically, if this is an SOS and it's trying to like break out, has a bit of a weakness in it because it hit a widening top, came back, it already checked the creek in my opinion. So while there's a possibility it does come back down to like $19, you're looking at a ticker right now that has the potential to just kind of keep going. Now, I'm not going to do any kind of macro, super crazy outlook on this. I just think it's one to keep an eye on. Quantum computing is still pretty new, so a lot of these guys, they're already overpriced, technically, because there's not really a lot of practical use for quantum computing yet. It's a little bit like AI was in the early days, where it's like, yeah, they're developing AI, but nobody's using it, or it wasn't being implemented for a while. It's kind of like that with quantum computing. But do these tickers, if they're winners, if they get picked and all this other junk, do they have the potential to be like your next Palantir or whatever? Absolutely. Of course they do. I don't think that's even really much of a question. It's more about which ones. There's a few that I follow, D-Wave, IONQ, and there's like one other that I follow sometimes. But I like IONQ for the chart. I think that this is a bit tricky because there are elements here that make me think this is pretty bullish. And there's some things here that I'm like, I could see it having some correctional time before anything else happens. This, to me, looks good. Like it dipped and then came right back up into its RSI trend. But when it came back up the second time, most of the volume was in the top. It came up the first time. There's a decent ramp of volume all the way up. But there's a huge spike in volume coming off of $17, which again, that's the level that was back tested. So part of me is a little bit concerned it may come back to 17. I would keep an eye on this, and if it ever came back down to like $20, which again, I can't tell you it will, but if it ever did, I'm going to be buying it because I think it's a really good deal. But the tricky thing right now is going to be like whether or not it breaks here. And again, if this is an SOS and a sign of strength, it backed up and it's holding right now above the top, and it is, it's possible that this just needs like a simple little breakout and it could be off probably $80. That's a huge move pretty soon. I'm not even exaggerating when I say that. Like, I genuinely don't see it as a big deal here for this to kind of break out again. These are opposites, aren't they? It's like, well, on the one hand, it's like, yeah, go way up there. On the other hand, you're saying go down. So it's basically like between two spots of high interest. Yeah, it is. That's what I'm saying. Like, I don't find this to be a particularly difficult one for me because I'm like, well, it seems to me like there's a pretty decent chance that if it passes above, $50 again, it's probably going. And if it drops down beneath, 37 or 36.50, you can look backwards towards the 20s again, or at least $30. I think that's a reasonable assumption there, and that would be a great place to buy back in if it does drop down. So I'm like really excited about that. That's all I'm going to say about that one. This one caught my attention, and I haven't ever looked at the chart. I heard this chart looks like crap, and it does look right. So that does sound right. So I heard this chart looks like garbage. I was reading through, I go through like a lot of different articles and stuff. Some of that stuff is pretty much trash. Like, it's not really worth your time. And I'll read it and I'll be like, yeah, I don't really care about this anymore. Because there's something that, they're talking about this or that. And I'm like, that doesn't make any sense. Other times I feel that, maybe a little bit on edge about it. This was one like that where I was like, this is kind of interesting. And I'm a little on edge about it. Like, I don't really have a strong opinion yet, but they said that the chart looked really bad. I'm kind of looking at it like, yeah, it doesn't look awesome, but it is approaching lows on the RSI on the daily. And that's kind of attractive because it looks like this could be an S curve. So one of the weird things about this one, and I know it sounds a little bit unbelievable. Let me pull up that statistic. I double checked it and I was like looking at what they were actually looking for. So for Q2, there's an expectation that this is going to be year over year like 13,000%, which is ridiculous. I don't really understand everything like that, but I think that like why, like where those numbers come from. But they're talking about EPS, and they're talking about what would be the expectation, I guess, of like the earnings increase year over year, and also like revenue and some other things. So they were specifically using certain metrics, and I was like, that's interesting. That's really, really high, and there's an earnings report coming up. This is one that's just an energy company. I think they're out of Oklahoma, and yeah, I don't know. I mean, it's expensive. It's $100, but if they're really expecting to beat by like 1,300% or something year over year increase, that's a huge increase in year over year. You know, I think it was EPS was that where that number came from. I'd have to double check. I have to go find the article again. I took a screenshot, but I don't have the rest of the context. So could this be like a potential S curve was my question when I first opened this chart a minute ago. And I think it might be. It looks like maybe out into September. This is going to be kind of interesting. Let's take a look. Because this is kind of, I don't want to say it's an easy win, but it is a really powerful chart if it really does have that much year-over-year growth. But let's not overestimate our chances of something like that happening. Okay, so that seems more reasonable. That's about 140. This doesn't seem way out of line to do, but I'm gonna take a marker here. That's also pretty similar. So this already looks like it came up and did the full 50-50 here, unless you go to like the liquid center, and then it's like basically the same spot. Now if you can, I don't know if you can see it that well on the chart. So what are you looking for, Bugsy? That's what I wanted to know right there, and it looks like it's the same line. So that's a good sign. You might think that's not good because you're like, well, it generated like a bottom here and then it rejected, so why would that be good? This could be like a gigantic cat ear, you know, that pops and then dumps again. Yeah, I mean, there's always that danger. You know, if you go back and you look at a chart, even like a GME or something like that, long term, this does happen quite a bit.